Started with part 2 of tonight's event. So again, welcome to Opportunity Zones Meetup. My name is Karl Dakin with Dakin Capital. I am hosting the event, and unfortunately for all of you, I'm also the presenter and speaker tonight. But we've got a really hot topic, which one that I've actually been working on business modeling since 2005. Just to prove that a good idea doesn't always move quickly. So we're going to be talking about this. So there is a skills deficit. This seems to be generally acknowledged, so I'm not going to spend a whole lot of time on it. I'm going to talk more about its impact on an Opportunity Zone project. But there is a report. You'll get the slide deck, which will have this link in it. It's a 7-page report that this is a worldwide kind of pandemic type of a problem, and it's always been there. There's always been a shortfall of skilled workers, but at certain times in the ebb and flow of economics, there's more problems rather than less. And right now, at a worldwide level, it seems far more severe than it is here in the United States, and it's bad here in the United States. And as we're seeing rising housing prices, and even as we succeed in an opportunity zone, we are rewriting the economics of that zone, which means it's going to be more expensive to live in that neighborhood. Gentrification is almost guaranteed within an opportunity zone from a successful project. And the wages, again, one of the ways to upgrade or bump wages is to improve the skills of the worker, move them into higher paid jobs that allow them to maintain homes in the community and continue to be members of that community. So what we've seen, as I mentioned earlier, is that say you have a real estate project, and we've got several people I know working on projects in both rural and urban areas across Colorado, and you say, this is good, I'm going to go build a house. Well, in order to build the house, somebody's got to be able to pay the rent. And in order to pay the rent, there's got to be a job, and it may be that the closest job is 40 miles away or 50 miles away. Now that is starting to become an impediment on that person's ability to work over there and live over here. And so what we're seeing, a lot of the communities are saying, come over here, start your business here, relocate your business here, make yourself more attractive to raising money by relocating into an opportunity zone. But as they move, they may lose some workers and they have to retrain them. Or they were already short of workers and needed more. Or they're a brand new high-tech business and there are no workers, or there's never was enough workers. This whole thing is amplified. So if you're trying to do an opportunity zone real estate project, particularly of scale, you're saying, well, how am I going to make money off the real estate? Well, if you're going to buy it and rent it for 10 years, you really are more concerned with, at the end of 10 years, are all these properties rented? Because if they're not rented at that time, if you don't have full occupancy, then at that point the value is going to be less, which means that as you do your cash exit, your investors aren't going to get as much money out of it. So this is why we're talking about long-term investments. What can you do to influence, particularly the local economy, to improve upon that? Well, one of the things you can do is try to work with all the businesses who might be tenants in your buildings. You might work with the construction workers. You might work with everybody to help with the skills training. As more people live in your community or rent commercial or residential space who are making higher wages, you can generally charge higher rents. The whole thing continues to work together in a complementary fashion. So this is a big issue, and it is, if it's not addressed directly in your plan, if you're a little siloed in, I will say, or you're focused on just what you're doing with that, considering its impact on the community and how that community is impacting your outcomes, you may be missing a need to take action to mitigate risk, but at the same time you may also be missing an opportunity to make more money within your project. This is something that you don't necessarily have to do yourself. You can partner with somebody else, and we'll be talking about some of those kinds of relationships that are there. Again, as I said, this is a fairly recognized, accepted issue It just happens to have its own impact upon Opportunity Zone projects. But other than that, you can read the report or do your own reading on the subject. I'm not going to take up a great deal of time in tonight's program. In fact, I'm not going to take up any more time in tonight's program. So this is end of part 2.